Right, let's move over to Mindspace Business Parks REIT. The company reported a 24% jump in quarterly net operating income and highlighted confidence in the long-term prospects of the portfolio. Distribution to shareholders increased 18%. The momentum was led by acquisitions, rising rents and growing occupancy. When it comes to the overall REIT market, China is the leader in Asia, but India also emerging as a prominent player, posting a 13% growth in 2024, according to a latest study by Cushman & Wakefield. Let's get into this and get into the REIT space in India. I'm delighted to say Ramesh Nair is with us, CEO of Mindspace REIT. Ramesh, great to have you on Inside India and welcome. First of all, where do occupancy levels stand and where are you putting the outlook for the next 3 to 6 months?
Thanks, Sri, for having me on your show. Our gross leasing last quarter was 1.7 million square feet, which helped us increase our revenues by 21%. Our occupancy went up to 93.7%, the highest we've had since listing. Our NOI is up 24.2% and distribution is up 18%. From a market point of view, what we are seeing, Sri, is exceptional demand from global capability centers. In the last 3 years, demand for global capability centers go from 19 million to 23 million to 29 million square feet. The size of deals in the market have gone up from an average of 35,000 square feet to 55,000 square feet. Vacancy levels, which were around 17%, in the last 2 years have come down to around 14.5%. Today, American corporations take around 45% of all leasing in India, which is more than Indian corporations, which is at around 38%. And absorption in the last 4 years, we've seen it go from 25 million to 36 million to 43 million to 50 million square feet. So across all parameters, the market looking good, so is the outlook.
Interesting. So just picking up on the GCC side of the business, Ramesh, do you need all these trade deals that India is negotiating at the moment with relatively limited success with the US, of course, to coalesce and to be finalized in order to sustain that GCC momentum part of the business, or are you fairly agnostic about all of that?
Today, the GCCs, Sri, there are close to 1,600 of them in the country, which occupy close to 300 million square feet. GCCs are growing at around 11%. We see this 300 million square feet by 2030 go to around 540 million square feet. Whatever tariffs have been announced recently, Sri, we are only talking about goods, not IT services and software services. There could be an indirect drag because if US companies are spending lesser on their discretionary IT spending, that typically has an impact on Indian IT services. But the Indian IT services slowdown has been in the news for some time for the slowdown. But GCCs on the same side have been growing. So what is happening is the tech jobs today are becoming the GCC jobs. Just look at some of these American companies like Accenture today has more than 360,000 employees in India. JP Morgan today has more than 65,000 employees in India. And what we are seeing is tomorrow, if the tariffs, because of the tariff, the cost of goods in the US are going to go up. And this will give, I think, the GCCs make GCCs even more attractive to cut costs in non-goods functions like finance, like engineering, analytics, tech support. So I think GCCs are probably the best hedging strategy for American companies against any global trade volatility.
Interesting, Ramesh. But domestically, when you consider what's been happening with some fairly severe news about layoffs within IT services giants like TCS, are you concerned that if that picture worsens, then it's going to slow down activity in that space? Although these are typically, as I understand it, long-term leases, long-term 20-year contracts.
I wouldn't worry too much on that, Sri. I'm just quoting the World Economic Forum data. which was talking about how much AI is going to impact jobs. There's a lot of fear on how many jobs are going to be lost. So World Economic Forum was speaking about how new jobs, 170 million new jobs will be created, 90 million jobs will be lost. That's a net addition of 80 million jobs. In that 80 million new jobs which will be created globally, India could create more than 5 million jobs, so which is second after US in tech and AI jobs over the next 5 years. A lot of jobs which will be created. I think there's an opportunity to create anywhere between 500,000 to 1 million jobs in each one of these sectors, whether it's AI, whether it's machine learning, data scientists, cybersecurity experts, cloud computing experts, big data experts, fintech engineers. I think there's huge opportunity, but it also depends on reskilling and upskilling of the Indian workforce. So skill mismatch is still a risk.
Interesting. Ramesh, so for the quarter, the stars were perfectly aligned, weren't they? Whether it comes to distribution, occupancy and leasing. Does that imply that you are on target, and I saw a figure here, to raise occupancy levels to 95% in fiscal 2026?
Today, we manage a big portfolio, more than 37 million square feet. GAV is close to 37,000 crores. That's the plan, to touch occupancy, take the occupancy to the 95% mark by the end of this financial year.
Understood. And then what does that imply then for the balance of the year, risk and reward, and where they are heading in terms of distribution? Can you keep up these rates of distribution and yield?
So distribution this quarter was very strong. We saw an 18% increase in distribution. Distribution used to be a concern of the analysts and our unit holders a couple of years back. In the last 3 quarters, we've given distribution increases of 38%, 11%, and 7.5%. So distribution shouldn't be a concern. Distribution growth shouldn't be a concern any longer.
Right, and acquisition profile was strong, Ramesh. So can you give us a bit more colour and bring us up to speed with the acquisition plans? I believe you outlined in late June when you were evaluating 5 new commercial properties in some key Indian cities. Where are you on those developments?
So we did our first third-party acquisition spree. This is from an institutional owner. There is an infrastructure improvement opportunity. Within the same acquisition opportunity, there is a core plus value add and opportunistic availability. This is in Hyderabad. Hyderabad, like you know, has emerged as the top GCC destination in the country, neck and neck competition to Bangalore. This also gives us an entry into financial district, which is a big micro market in Hyderabad. Today, our Hyderabad portfolio stands at 16 million square feet. The acquisition we just completed, that's at a cap rate of 9.9%. It's a 800,000 square feet asset, which we bought for nearly 510 crores. We're going to rename the asset as the Square 110 Financial District. This is the first third-party acquisition we have done in the last 5 years of our listing, and this is around a 12% discount from the valuation. So big opportunity for us, especially in a market like Hyderabad, which has 350 GCCs.
Exactly, and I just want to ask you to expand on that, Ramesh, because we had a really interesting conversation last week with Andhra's Chief Minister, Chandrababu Naidu. He's very committed to scaling the knowledge economy in his state. So where are the tech clusters emerging, in your opinion, on a state level that will build on the success of Bengaluru and Hyderabad?
Hyderabad is located in Telangana, which is the adjacent state to Andhra. The top 6 cities, Bangalore, Chennai, Hyderabad, Mumbai, Pune, and Delhi, continue to dominate. In the next level of cities, we see Visakhapatnam, Cochin, we see Trivandrum, Indore, Jaipur being the next set of cities which will do well.
Understood. Ramesh, and more broadly, and arguably this is out of your jurisdiction and your wheelhouse, but there is I'd welcome your thoughts on the affordability crisis, especially amongst the middle class that are looking to move into the property ladder. We were speaking to an expert a couple of weeks ago, and he was saying that, look, what needs to be done by the government is to really consider building these mixed-use hubs outside the slums, redeveloping them, and looking at housing, looking at schools, looking at clinics, etc. Do you think that that is a model in which Mindspace REIT could be involved in, participate in the future?
So ours is overall an office-focused REIT.
Yes.
I agree with you that the country need to be doing a lot more on the affordable housing segment. From our side, what we have done is it's very important to create mixed-use clusters. So we're creating more hotel campuses. We're creating more clubs. Our new club in Hyderabad, the Pearl Club, is opening in the next few months. We are creating more F&Bs. Our new F&B cluster in Airoli, what we named as Mindspace Fusion, that's just opened last month. We are creating more landscaping, more campus environments. We are creating more employee engagement. We won't be doing residential as part of the REIT, but today the good news is something like Navi Mumbai, we have close to 140,000 new units coming up in and around Navi Mumbai, which is going to help our Navi Mumbai parks.
Fantastic news, Ramesh. Thank you very much indeed for joining me on Inside India and breaking out those quarterly numbers and the path ahead for Mindspace REIT. We appreciate it. Ramesh Nair there from Mindspace REIT. Now, Vietnamese EV maker